All right then. A very warm welcome to everyone who's present today. Uh, Good afternoon, and welcome to our second webinar in the series of webinars that we've launched. Today's topic is about understanding crypto taxation, whether or not you're an investor or you're a trader. Uh, we realized in multiple interactions with the government officials, with our customers, that this became a very pertinent question when it came to crypto taxation. You know, are we considered as investors? Are we considered as traders? Which bucket do we fall into, depending on the kind of trades, etc. So obviously, it made a lot of sense to work around this topic, and uh, so that's what we're going to do today. So largely, yeah. To start with, let me introduce you to Zeppe. Zeppe was founded in the year 2014, and that was when we hired our first employee. We've had a brilliant roller coaster ride since then, exactly like the way cryptocurrencies have had. We've managed to scale exponentially, and we've managed to have 2 billion users on our platform, and we've managed fiat transactions worth 3 million Australian dollars. So these are all fiat transactions, not crypto transactions. And our platform has managed to scale to that level. So it's been a fantastic journey so far. Recently, this year, we started our operations in Australia, and it's been brilliant. Australia has given us a very warm welcome. We've had multiple partnerships. We've had a good run so far, and we're looking forward to a lot more exciting things lined up for the Australian market. Today's speakers it's of course me, and then I'd like to introduce you to Nick from Kova Tax. Nick is the co-founder of Kova Tax, and he's the modern. He's got this brilliant take on how accounting should be done, how there should be a lot of innovation, how technology can help us make that process a very simple and streamlined process. He leads the development of tax technology solutions, and he's on a mission to eliminate tax through automation across Australia and New Zealand. So welcome, Nick. Thank you so much for joining us. You'll have to...
Thanks, Mena. Thanks for the warm introduction. Thanks for everyone else attending as well and tuning in. Really looking forward to telling you a little bit more about tax treatment of investors and traders. And for me in particular, I'm going to be talking about what your top 3 sort of indicators are for who would be considered to be a trader, especially from the perspective of the ATO. So we'll get into that a little bit later, but thanks for the introduction, Benha.
Our second speaker for today is Marina. Marina brings a lot of accounting, audit, and compliance experience into the picture. And she's worked as a corporate and international tax compliance advisory for multiple years. She's also on a mission to help businesses and individuals in the digital asset and financial technology sector understand taxation and all of its implications. So we've got a very strong lineup today. To introduce myself, my name is Manhar Garegrat. I'm working with Zeppe, and I look after all the digital initiatives at the company. I've worked across a varied range of industries, and that just allows me to be a little more empathetic towards different industries and what all it takes to sort of make a successful marketing launch. Nick, over to you.
All right. Hi, everyone. Thanks for joining us. So I'm going to share my screen now, and we will start with the tax treatment. So first, we're going to have a look into tax treatment for investors. As you can see on the slide, so we are going to have a look into our first outcomes. So for tax investors, what are the most common outcomes? It can be a capital gain or capital loss. As we know, if it's a capital gain, that's pretty straightforward. You just have to pay tax. But what happens if you have a capital loss? This is the interesting question. If your capital loss is not possible to use against other capital gains, which actually is allowed, so you could have offset capital loss from cryptocurrency against capital gain from shares or unit trusts or maybe real estate, then you have to carry forward your capital loss. So that would mean that your capital loss would be carried forward to the future. And the other question may arise is how long I can do that? Like, is there any expiry date on my capital loss? And the answer is there is no expiry date. So you can carry forward as long as you need it, unless the future capital gain arises. What are the most common structures for investors? So for crypto investors, the most common structure is you just as an individual. You may have a trust where you join together with your family members or friends, and you may also have a SMSF, which is pretty common now. What are key benefits of being into investing structure? So that would mean that if you actually meet the requirement, if you held for longer than 12 months your crypto, you will be eligible for the CGT discount, which can be for individual as much as 50% and for trusts as well. And if you are trading under SMSF, it would be 33.33%, which is 1/3 of your capital gain. Now, the most important question is actually to understand what it means in tax legislation for holding longer than 12 months. What does it mean? The answer is that legislation is actually a bit tricky around that. So you need to understand that the purchase date is not into account. That means if you bought on the 1st of January in 2018, let's say, you may need to sell on the 2nd of January 2019 to be eligible for the CGT discount. Because crypto never sleeps, you can trade 24 hours and you can invest 24 hours around. Now, the other question that we may get sometimes, like, is it important if I sell like at 1 p.m. or 5 p.m. on the other day? And the answer is no. The legislation doesn't state that the timing is important. It is important to know that the date ends at 12 a.m. and this is the only thing that counts, dates. Now we're going to move to the next slide, which is about tax treatment for traders. So if you're a trader, what are the most common outcomes? You may get profit or loss. If you're a trader, you're on a revenue account. So if you have profit, that's pretty straightforward. That's treated as wages and all other kind of income, you know, you have to pay tax. But what happens if you have revenue loss if you trade? Now, this is interesting because it's actually different from capital loss. So if you are a trader, you may be eligible to offset your trading loss from other sources of income if you meet one of the non-commercial loss requirements, which is important to discuss with your tax accountant. What are the most common tax structures for traders? If you're a trader, you can be a sole trader, which is very common structure because everyone starts as an individual in this space. But if you are very serious about trading and you started to execute good profit, it's more attractive for you to consider company structure because you may be paying on the company tax rate, which is as low as 27.5% at the moment in Australia. And if you are a sole trader, you always have to pay tax according to your individual tax rates, which are pretty higher. What are the most important key benefits for being a trader? Now, being a trader is actually brings you more alternative in election for tax treatment. For example, we know that you need to keep an eye on your closing stock. So your stock is important, which is your cryptocurrency. You need to measure your closing stock as of 30th of June, and you actually have choice. You can pick cost method or you can select the market value. If you pick cost method, that means straightforward. That's actually exactly how much you pay for your cryptocurrency. And hopefully you have a record for that. If you select market value, that can give you a very different tax outcomes. And sometimes that's actually better. If you select market value, then the other question comes, the ATO states that you should measure your cryptocurrency at market value at the reputable currency exchange. And the common question that we get, like, what is the reputable cryptocurrency exchange? And the answer is, well, the ATO doesn't list them, and we more likely never get that list because they would never endorse any particular business. So that means you have to look at the reputation, and it comes as normal as what is media says. Is that a particular digital currency exchange is still alive? Do they give you proper record? That's a good indicator. So you're definitely not going to look at Mt. Gox or Cryptopia or something like that. Now, being a trader also means that you actually can value different trading stock at different methods, which gives you a more alternative election. And the other thing that is important to mention is that you allow both for way more deductions. And we're going to have a look at the slide next, which actually states all possible deductions that you may have if you are into business on trading. That's pretty common to know that you're eligible for all immediate deduction for your brokerage fees, for any kind of other withdrawal fees and other charges on the exchange. Then you may subscribe for magazines, newsletters, market reports, data feeds, analytics and trading software, like chart software for traders. You may also pay for seminars, education, any kind of courses and mentoring, coaching in this space. If you are really serious in business of trading, you possibly rent premises and pay for the internet, obviously. Now there is also a good incentive. If your turnover is less than 50 million, you should be eligible for instant asset write-off. So any purchases for computer, desktop monitors and other hardware like wallets, which are less than 30,000, you would be eligible for instant asset write-off. Now this tax threshold is actually something to watch as well. It actually means that the amount should be exactly less than 30,000. So it has to be like 29,999.99 cents. And this number is including GST if you are not registered for GST. And if you are for some reason registered for GST, then it is exclusive of GST for you. Now we are going to have a look at record keeping. This is something really important for everyone. If you are a trader or an investor, it doesn't matter. Every one of us actually have to keep our tax records in Australia for 5 years. And let's think what is important for cryptocurrency traders and investors. The ATO is very clear about what exactly you need to keep. So they say that the information that you need, it has to state the date of transaction, the value of transaction in Australian dollars, the purpose of transaction, sort of like your intention, why you are doing this. Is it for trading, investing, personal use asset, and things like that? And also counterparty address or transaction. So that means actually if you're trading on exchanges, most likely to be the address of that, the name of that exchange, but you need to actually keep an eye what the exchange terms and conditions are. Now, you also have to export data like CSV files or PDFs, whatever is available on every exchange. Exchanges are getting better with this, and these days they call trading statement or exchange data experts of trading. You may need to also work out your portfolio if you're an investor. This is important to know what is your investment at the 30th of June so that you know next year this is how much exactly you had and this is how much you can sell for tax purposes. If you're a trader, you need to know your trading stock as of 30th of June. This is something also to keep an eye on because a trading stock will vary and it may vary your tax outcome. Now you have to have digital wallets, I guess, and hard wallets, and all these records from the wallets is also important to keep, and their addresses. And for all your expenses, obviously, you need to have all tax invoices. So this is the information about main tax treatment for cryptocurrency traders and investors. And now I'm going to pass to my colleague, Nick, and he will take you through the journey about what is the difference and how you can actually identify yourself. What are the indicators for trader or investor?
Thanks for that, Marina. So hopefully everyone has a really good understanding now of what are the key differences for your tax treatment between being an investor and being a trader. So what I'm going to take you through now is a trader, and are you considered to be a trader? So the first thing that is really important to keep in mind is you don't really get to make the choice between the two. You're either one or you're the other. And that decision is based on your intent in undertaking the activity and also the actual objective facts around the activity that you've undertaken. So when the first thing we look at is the actual tax legislation itself. And when we look at the tax legislation, it doesn't say, I've placed this many trades each week and I'm placing this amount of capital into the market and I'm trading every day, so that you're considered a trader. It doesn't say that. But what it does look at is, are you running a business operation? Are you really in the business of trading? And that's what we look at in the tax legislation itself. So obviously it's absolutely critical that you're meeting that criteria, that you're in the business of trading. The second thing that we look at is, even if you do meet those legislative requirements, is do you meet what the ATO considers to be a trader? Obviously, this is really important as well because the ATO can disagree with you. And even though you are allowed to self-assess that you are a trader, if the ATO disagrees with you, you may be in a situation where you have to either prove to them or go through some dispute process to convince them that you are actually, correctly treating yourself as a trader. And this is obviously a time-consuming process. It can be an expensive sort of situation to find yourself in, and it's really something that you want to avoid. So when we look at an individual and make this decision whether to treat you as an individual or as a trader, we're not only looking at the legislative requirements, but we're also looking at what are the criteria and the guidelines and what we call the indicators that the ATO is using internally when they make the decision, when they look at an individual and try and decide whether you're a trader or not. So what we're going to go through now is not all 20 plus indicators that we sort of have, but we're going to look at a few of them, the top three, which we really think are the most important. And when we go through these, you can even think from your own perspective of your own activity at the moment where you fall on that sort of, are you your indication towards more of a trader or as an investor? And you find, even if you're an investor now and maybe you thought you were a trader, as your activity progresses over time, you may find that you make some transition point where you're no longer really treated as an investor for tax purposes, but you would be considered to be a trader. So obviously it's really important to know where that cutoff is so that you can understand what the tax implications will be for you. So the top three that we're going to look at today is around your repetition, volume, and regularity. This is all about your trading activity itself, how frequent it is and how much you're doing. Obviously this is important. If you're not trading much, you're probably not going to be considered like running a business. The second thing is the sophistication of your operation. And this is all about, are you genuinely in the business of trading? And if you are, this is a really good indication that you are, a trader. The third thing is your documentation around your business operation. So this is all about being able to substantiate the fact that you are running a business of trading. And also, it's expected any business will have a lot of this sort of documentation, such as a business plan, in your case, a trading strategy and things of this nature. So we're going to look at these in a little bit more detail, and you can have a think about your own activity and how it applies. So the first one is your repetition, volume, and regularity of your trading. So how frequently are you trading? If you're trading every day, a high quantity of trades, this is a good indication. It's even possible you may be running some sort of trading software or an automated trading software, placing tens, hundreds, maybe even thousands of trades each day. This is probably a really good indication that you are running a business operation. Then there's also the volume of your trades. If you're just placing a few dollars, this really doesn't have a strong expectation that you're making a real profit from your activity. So it's also about the volume of your purchases and sales. And then also how regularly you're doing your trading activity. So you may be really consistent and regular for a period of a couple of weeks, but then you stop for a few months. And then the question is, are you really regularly running this business like any other business that you would run? So there's an expectation that basically working full time in your trading operation. The next thing is around the sophistication of your trading operation. So keep in mind, you are in the business of trading, and this, you want to be able to show that you really are in the business of trading. So things like your qualifications, prior experience and knowledge in that field. Maybe you have a degree in finance, or possibly even in software or something like that. Or potentially you're undertaking a lot of training and education currently to increase your skills so that you can be more successful in your trading. This is really important. The next thing, maybe less obvious, but you might want to get an ABN. So even as an individual, you can get an ABN, you will be a sole trader, or possibly even register a business name. So these won't really impact your trading, but they're very strong, very indicative of someone who is treating your activity seriously as a business. Most businesses would have an ABN so that they can trade. The next thing to look at is do you rent an office or a location to undertake your trading activity from? And do you have dedicated equipment and hardware that you're using for doing the trading? So this is an excellent example. It might be that you just trade on your phone or on your laptop, but this probably isn't like a strong indication. If you look at like what the ATO sort of perspective on this is, you really want a dedicated hardware, desktop PC, maybe even like a high performance one. You don't just have one monitor, but maybe you have all four, monitors set up to really be doing your trading correctly. It's sort of a funny one because maybe that's not necessary for the trading that you're doing, but it is actually, indicates to some respect that you are in the business of trading. So the last section is your documentation. And this one is probably out of all of them, the most important, because this is the one that is going to be able to substantiate what you're doing. So if the ATO, comes knocking and they want to know, were you really in the business of trading? This is the information that you're going to be sending to them and they're going to be looking at. So these are things like your business plan. And this is absolutely critical. If you don't have a business plan, you're not considered to be in business because every business is considered to have some business plan, some strategy of how they're going to make profit in their business and sustain themselves. So if you don't have a business plan or you don't have a trading strategy of how you're going to be executing these trades and making a profit, that's not a good sign. So it's really good to have these in place, have something comprehensive, and it's really good for your trading anyway, so that you have some strategy for yourself. Another thing which is really common in the trading space is to have some sort of journal. So each time you enter into a trade, you have some entry plan, you have some exit plan. How are you going to do it? What are the signals you're going to rely on? And this is a way for you to also reevaluate how you've performed and improve for the future. The next thing is quite obvious with your invoices and your expenses. As you're making those, definitely record those. You're going to need those to claim your deductions in any case, and that's obviously a very important thing. So I'm going to pass this on now to Manha, who is going to talk a little bit more about the documentation that they do at ZepPay to help support you as a trader.
Thanks, Nick. I'm just going to, so coming back, one very quick, if anyone has any questions, feel free to just throw them in and we'll be happy to answer them. Just coming back to what we're doing at ZepPay to help you file your taxes better, to ensure that you're fulfilling all your tax obligations. Firstly, we've got out these tax statements, and like Marina mentioned, the ATO has certain requirements which are very important from a record keeping point of view. You need to have your details in place. You need to have details of each and every transaction that you do with on any exchange. You need to have the amounts in Australian dollars. You need to have the date, time. You need to have the intent and the purpose. And majorly, the most important thing is that you need to have details of the counterparty. So with ZepPay, it's very interesting that the counterparty is always All-in-Can Innovations Australia Private Limited, which is our company. And this remains the counterparty whether you buy or whether you sell crypto on our platform. So it's extremely straightforward in that sense. What you're seeing on your screen here is basically a trade statement that gets attached each time you make a transaction on the ZepPay platform. This comes to you in the form of a PDF. We are also currently making inroads into giving you an opportunity to download a statement which is a monthly, which is a yearly, or of any custom duration that you would like. So that would be a simple keying into our platform, just putting in your dates, selecting the format that you want, and the statement gets sent to the registered email address. So this is something that we're just currently working on. But these are some of the small things that ZepPay is doing to help all of its customers, fulfill all of their tax obligations. Another thing that we've also done is we've gone ahead and we've created a fact sheet, a very detailed fact sheet. This fact sheet essentially outlines all of the key nuances of taxation that an individual should be aware of. So, for example, if you do not have a tax agent, you must lodge your tax return by 31st October. So small things that are very important from an individual taxpayer's perspective. This fact sheet is available for all ZepPay users. And if any of you would like to request for this fact sheet, just drop us a line at au@zeppay.com. We'll be happy to share it with you as well. And beyond that, we continue to partner with firms like Tax, SMSF firms, all of these partnerships, so that we can help our consumers enjoy the crypto revolution much better. So any questions, feel free to throw them at Nick, Marina, or me, and we'll be happy to answer them for you. So we have one question for Nick. Galaxy A6 says, "Hi Nick, is an ABN absolutely required as an individual trader?"
Sure, that's a great question. So everything that we went through in those sort of indicator slides, these are just indications. So nothing there is a requirement at all. They just would indicate that you are more likely to be considered a trader. So in the particular case of, do you need an ABN? No, there's absolutely no requirement for you to have that. But if you did have one, it's just one more step which would indicate that you would be a trader, just because you're taking your activity a little bit more seriously as a business might. So you don't need to have one, but especially in this case for an ABN, it's basically free to register one. It's very quick and easy. I mean, if you want one, you can get one. So.
Any other questions? Okay. I think we're good to go. Thank you so much, Nick.
If anyone else has questions later or in the future, they're welcome to contact us. Anything tax related or trading related or anything like that, please get in contact.
Absolutely. So you can get in touch with us, you can get in touch with Nick, and we'll be happy to help you with all of your questions. Thank you so much for joining us. Thank you so much for your time. And thank you so much, Nick and Marina, for that wonderful educational piece. We look forward to sort of engaging more. Thank you.
Thank you, Menha. It was great that you guys joined. And yeah, if you have any questions, shoot us an email.
Absolutely.